Well, good evening, all. Ira Epstein, and here we are with your financial market wrap-up. And this wrap-up is for the evening of the last trading day of July, the 31st of July, 2024, 6:20 p.m. Central Time. Well, as you can see, more of a rally tonight going on in some of these stock indices. And the reason is earnings after the market. And they were pretty good. Meta looked okay, spending more money on AI and increasing the money they're going to spend on it. That's just what you want to hear for the NVIDIAs of the world and the other chips that are a little less, I'm not going to say quality in a negative way. That's not what I mean. Not as robust is probably the better word, because NVIDIA is ahead of the game at this point. Others will catch them. I know people don't believe that. It's the way that it works. But you will see that that happens over time, and it won't be years. It's going to be a shorter duration than that. Money makes it all happen. When you look at the metals, pretty good rally still taking place. They haven't ended. The dollar down. Mixed bag in the currencies. You know, today the Japanese, they both raised interest rates and they're cutting the amount of securities that they buy. So it's a double whammy. By the way, if any of you use TradingView, I'll come back to all this in a minute here. I want to remind you that all you need to do is go to our website under that's iraepstein.com, under Client Resources at the top right, and you can get our suite of indicators that'll have the studies that you see me use here, such as you'll get the swing lines if you work with them. You can get, by the way, my slow stochastics, my formulas in it. All the moving averages that I use will be there. Bollinger Bands, of course. Outside days are going to be highlighted on your charts because I think they're so important. And you can turn all this stuff on and off, by the way. My formula built into everything in terms of your slow stochastic, the outside days. It pairs with my morning videos if you're a subscriber, especially for the window envelopes where I give you the daily numbers and everything as a subscriber. It works with a lot of different options. You can turn things on, off. It only takes up 2 slots on your TradingView if you're using that. So just go to iraepstein.com, top right, Client Resources, and away you go. Okay? All right. There's a lot of data coming out tomorrow. So in that data, you get the Bank of England coming out to set its monetary rate. Then we're going to get the Challenger Group with the estimate of planned U.S. employer cuts. Then we're going to get the 2024 second quarter non-farm productivity, jobless claims, 7:30, Global Group final. July manufacturing PMI, that'll match up with the prelim, and the ISM data is going to come out at 9 o'clock for their July manufacturing numbers. So we get an awful lot taking place. You know, today we went through what the Fed talk and everything that happened there. And in a nutshell, if you get my newsletter, I give you a whole write-up and review of what took place. Let me get to the charts here. But put it this way. You're very close to a Fed cut. The Fed wants to see another set of data. Gee, did I not say they're going to want 3 months of data to see that it's coming down? Then they clarified. You may get a bump in a piece of the data, but they want to see that it's coming down, and then they will see what they want to do. They did not discuss 50 basis point cuts. If they go, it sounds like September could be the first one that they would go with. I don't know that they would go right after that in rapid succession as traders are building in. And just the reason they may want to look and see. This is a cautious Fed. They want to, and they said they're going to now focus on both labor and inflation. Now, let me explain. They only have 2 mandates. That's them. They turned their attention away from labor because it was out of balance, stronger than the market. Now that they say it's much more in balance, now they're watching it to make sure it doesn't get out of balance on weakness. So they're back to watching their dual mandate. That's the way to do it. They did not promise in this meeting that they're going to lower rates. The Fed chair did not say that's going to happen. He said it is data dependent, and the members' unanimous vote wants to see another set of data. So I think if you see that the July data that comes out throughout the month of August is weak, you could pretty well seal the fate of this, that you're going to have June, July, and if August is certainly a weaker month, you've got all that you need in there, okay? So I am of the opinion, very solid, that you will see a September cut. I'm wide open on what happens on the rest, depending on how and if the economy slows down. It's a double part to that. I cover it all in my written research. So as we look at the S&P back up, and for the week at this point, you're up 1.57%. The market's not stellar on this chart. You came down, and now you've whipped back up. And in the process, you've created a lower low and a higher high. So what you've actually done is you've ended with today's action, and this is the market coming into today, the pattern of lower highs and lower lows. And by getting the rally, you break that. So this leg of the market is over. That doesn't mean another down leg can't materialize, but that leg is over. Look where the market went up to and stopped on the rally. How often do you see me in these videos? And you can take the name of the chart off, it won't matter. You should be able to chart the way that I am and say, hey, you're going back to that 18-day average. That's a resistance point where markets want to pause a bit and see what's next. It's exactly what occurred. You had a market that had hit the lower Bollinger Band, couldn't stay under it, bounced away, and when it made another attempt for it, reversed course today from yesterday and set itself up there. Okay, and that's where you're at tonight, and momentum-wise, you were oversold. When we step to the NASDAQ, same pattern. So if I take away these 2 days of data right here, do you disagree with lower highs, lower lows? I thought the pause zone would be the combination of the 100-day average and the Bollinger Band, and yes, the market went under it. It's still the zone. And today, the market proves that correct, okay? In addition, you lost the bearish embedded reading. I think you're going to go back to the 18-day average before you take out this low now. In the Dow Jones, you have been holding consistently above the 18-day average and unable to really break through the upper Bollinger Band now at this point in time. That doesn't mean you can't. This was a very different pattern than where you're at. Look at how tight the Bollinger Bands was. So what you think of that as a pipe. And in the pipe's a spring, and you keep winding, and eventually it's going to break out to the downside or upside. That's when you get that gorilla glue trade often, where you ride the Bollinger Band every day. This is not that same pattern, okay? Different, and the resistance there should be formidable. You're overbought in the Russell, just sort of hanging here. This market at any time can give you a bit of a pullback. Remember, traders are moving temporarily back into tech right now. They like what they're seeing with the big companies, although we do have, I think, Apple, Microsoft, they're all coming out, another group. Is it Amazon tomorrow? I think it's Amazon tomorrow. They're coming out with their numbers. So you want to be right on top of all that. Then we get to the notes and the bonds, and they are over the upper band in overbought territory. I'll let somebody else want to carry that. The odds of staying over an upper Bollinger Band, again, are only 5% of the time, or under it. It stays within them. But you got narrow enough here to give you a little bit of that thrust in the market. We have a jobs report coming out Friday morning, so I don't think people are trying to take positions off very much. They're saying, oh, those jobs, they'll be keeping the market on its toes. I agree. You came back down to the 200-day average in the dollar index, and where you stopped on the rally was the combination of the green, the 100-day, and the 18. You are not trending in this market. This was a bear market rally. Yes, it converted itself to being more bullish than bearish when you closed over the 18-day average of close. And you did that 2 days. And today, when you took out that low, kaboom, you wash away any trend. The euro is fighting the same way between the upper 18-day average and, if you really look at it, the 100. Yes, it stuck its nose down to the Bollinger Band and snapped itself right back from there, but it is oversold. And I'm not seeing clean trends. I'll let somebody else want to play the pound, and do they cut their rate, don't they? What does the bank say? We'll see. Going into it, though, the chart action is bearish. You'd have to get back over this 129.07 to negate the downtrend. Bitcoin, not responding well at all to what's going on in the Middle East, sinking back into the support of the 18-day average. Your momentum was lost here, and often you go back to that 18-day average to regroup. On the energies, what bothers me with the rally in the Brent, and I'll share that with you very, very carefully, this was not a demand-driven rally. This is a fear-driven rally. It's not as though suddenly there's more demand for oil. The question is, because of what Israel did in Tehran, does it escalate everything? Because all the players, if you will, the bad players, as we call them in the West, are Iran surrogates. So they're not going to back down now that the motherland has been hit. If anything, they're going to be more aggressive. So you're worried about the supply at this point. Supply markets, I like demand markets a lot better. Same thing in WTI. You didn't suddenly get all this more supply. I mean, suddenly you're up today, give you an example here, 4%, and you think that's demand-driven? No chance. But you negated the whole downtrend. You're oversold. Maybe you go to the 18-day average. Let me come back here and show you. But I expect big resistance, 79.03, 78.96. Same in Rebob. Look at how much it came up in one day. This all is Middle Eastern. Markets were down anyways, they were oversold, and you gave the markets a reason to move in unison, another 4% in one day. These are big moves, not little bitty deals. Natural gas, it's not paying attention. It's just saying, you know, guys, you do your thing, but if I can embed, I'm going for new lows in the market. You know, 160 could be a number it goes to. I know it sounds crazy, but there's technical counts on charts that point to that. So, again, if you're interested in the trading view, right here, go to iraepstein.com. There'll be an icon up here you can click as well, and you can put them on your charts if that's what you're doing. I'll be with you, I hope, first thing in the morning. We had many technical glitches happen to us last night, believe it or not, into this morning off of updates that came from a major piece of software that shouldn't have affected our other software, and yet it did. And it went into them somehow and affected them. It wasn't CrowdStrike that we're dealing with either. We've got it all fixed. I'm Ira Epstein. I'll catch up with you.